Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within financial reports. And today we have Helen of Troy's latest quarterly update. And let me tell you, it's a ride with some serious ups and downs that make you wonder what is really going on behind the scenes. Before we dive in, if you love getting straight to the point insights from these complex financial documents, smash that subscribe button. And hey, if you want to connect with other finance enthusiasts and get exclusive content, join our Discord community, link down in the description. Alright, let's jump into Helen of Troy's quarterly report. They are a big name in consumer products with brands like OXO, Hydro Flask and Revlon. This report covers their financial situation up to the 30th of November 2025, and it shows a company navigating some pretty choppy waters. Let's start with the big picture on their balance sheet. As of the 30th of November 2025, their total assets stood at about $2.34 billion. That sounds like a lot, but the key thing is it is down significantly from $3.13 billion at the end of February 2025. This drop is largely due to a massive decrease in their goodwill, which fell from over $1.18 billion to just $530 million. This signals a substantial write-down, meaning they believe that portion of their business is no longer worth what they previously thought. It is like realizing a big chunk of your assets has lost a huge amount of its value. Their other intangible assets also saw a big drop. On the other side of the balance sheet, their liabilities are also interesting. Accounts payable jumped up to $284 million from $269 million. This could mean they owed more to their suppliers. Long-term debt also remains a significant factor. Now for the profit and loss, this is where things get really dramatic. For the 3 months ending the 30th of November 2025, Helen of Troy reported a net loss of over $84 million. Compare that to last year when they actually made a profit of almost $50 million. That's a swing of over $130 million in just one quarter. It's like going from a really good quarter to a really bad one. A massive reason for this loss is something called asset impairment charges. They recorded a staggering $65.9 million in these charges, just for the 3 months ending the 30th of November 2025, and over $800 million for the 9-month period. This means they had to write down the value of their assets to reflect their true worth, and that's a massive red flag. This hit them hard in their operating income too. For the 3 months ending the 30th of November 2025, they had an operating loss of over $8 million compared to an operating income of $75 million last year. That's a huge drop. Looking at their segments, the Home Surveyamp outdoor division saw its net sales revenue drop by 6.7%. This was due to tough competition, lower customer orders, and a decline in sales and channels like the club and closeout markets. This suggests their core product lines in this area are struggling to gain traction. The Beauty Simp Wellness segment paints a slightly different picture. While net sales revenue saw a smaller decline of 0.5%, the segment is grappling with lower sales in beauty products due to soft consumer demand and increased competition. They also mention evolving dynamics in the China market, which is impacting their wellness products. Overall, consolidated net sales revenue decreased by 3.4% for the quarter. This tells us that fewer people are buying their products, or they are selling them for less. And because of these lower sales and other pressures, their gross profit took a hit, decreasing by 7.3%. Their gross profit margin also shrunk, indicating they are making less profit on each dollar of sales. On the expense side, selling general and administrative expenses, or SG, and it increased slightly by 1.2%. This means their costs for running the business went up even as their sales went down, which is never a good sign. The bottom line is a huge net loss of over $84 million for the quarter. This translates to a loss of $3.65 per S-hair. Imagine losing nearly $4 for every share of stock held. They also talk about adjusted earnings, which is a way companies try to show a rosier picture by excluding certain expenses. But even with these adjustments, their adjusted diluted earnings per S-hair dropped significantly from $2.67 to $1.71. So even when they try to clean up the numbers, the performance is still down. A major theme throughout this report is the impact of tariffs. The company is dealing with increasing tariffs from China and other countries. This adds directly to their cost of goods sold. They are seeing tariff increases related to fentanyl and reciprocal tariffs, which are in effect. This is really driving up the cost of importing their products. They are trying to mitigate this by diversifying production outside of China and increasing prices, but it's clearly hurting their sales and profitability. You can see this reflected in their cost of goods sold, which increased by about 0.4% even as sales decreased. That small percentage increase actually means more money being spent on producing their goods. Another big factor is softer consumer spending. The report mentions that high inflation interest rates and tariffs are impacting disposable income. People are spending less on discretionary items, which are a big part of Helen of Troy's business. This has led to reduced replenishment orders from retailers, which directly hurt sales. Interestingly, their online sales have actually declined. This is a bit surprising in today's world and might suggest they are not keeping up with e-commerce trends or facing intense online competition. Within the home semi-amp outdoor segment, the insulated beverageware category specifically is facing stiff competition and lower customer orders. This is a key area for them, so it's concerning. In beauty sim wellness, while the overall sales decline was small, they are seeing weakness in beauty products due to soft demand and competition. The thermometry business is also facing challenges due to market shifts in China. They are still working on a restructuring plan called Project Pegasus that started back in fiscal 2023. The goal was to improve efficiency and cut costs. They expect to see some savings from it, but it's clear that these initiatives haven't fully offset the current pressures. On the legal front, there is a patent dispute involving their per-water filtration systems against Brita. While they seem to have won at the ITC level, Brita appealed, and the US Court of Appeals for the Federal Circuit affirmed the ITC's decision. Brita then decided to dismiss the patent litigation. It sounds like this dispute has been resolved in Helen of Troy's favor, which is good news. Looking at their finances, they have a substantial credit agreement in place. As of the 30th of November 2025, they had about $897 million in borrowings outstanding under this agreement, which is a pretty significant amount of debt. They also recently amended this agreement to adjust terms and borrowing limits. This shows they are actively managing their debt strategy. The good news here is that they state they are in compliance with all their debt covenants. This means they are meeting their financial obligations to their lenders, which is crucial for stability. Now back to those massive asset impairment charges. They've written down goodwill by over $648 million for the 9 months, ending the 30th of November 2025. This means they are acknowledging that a huge part of their past acquisitions is not performing as expected. They specifically mention a substantial write-down in the Beauty Fiddy arm. Wellness segment affecting brands like Health Suriamp, Wellness Drybar and Curlsmith, and in the Home Suriamp outdoor segment impacting Hydro Flask and Osprey. This is a huge blow and suggests a significant misjudgment in past strategic decisions or a severe downturn in those specific business areas. They also impaired intangible assets like trade names and customer relationships by over $158 million. This reinforces the idea that their past investments in brands and customer bases are not yielding the expected returns. Let's look at cash flow to see how they are managing their money. For the 9 months ending the 30th of November 2025, they generated $59.8 million from operating activities. That sounds positive, but it is less than the $78.2 million generated last year. The decrease is due to lower cash earnings and higher inventory payments, all impacted by tariffs. Investing activities used $27.1 million primarily for capital expenditures like buildings and equipment. This suggests they are still investing in their infrastructure despite the current challenges. Financing activities used $24.5 million. This is mainly due to debt repayments and offset by some new borrowings. So what is the story here? Helen of Troy is clearly going through a tough period. Massive asset write-downs signal that some of their past strategic bets, particularly those involving acquisitions, have not paid off. Tariffs and weaker consumer spending are impacting sales and profitability across the board. While they are still investing in their business and managing their debt, they are facing significant headwinds. The sheer scale of the goodwill and intangible asset impairments is concerning. It suggests that either their past valuations were overly optimistic or the market conditions for some of their brands have deteriorated dramatically. The increased costs from tariffs and the impact of inflation on consumers are creating a double whammy. The company has a diversified portfolio, which usually helps, but right now it seems like multiple segments are feeling the pressure. The decline in online sales is also a point to watch. Are they adapting to changing consumer habits fast enough? Ultimately, Helen of Troy is in a turnaround situation. They need to successfully navigate these tariff challenges, manage consumer demand shifts, and prove that their remaining assets are still valuable. The significant impairments are a stark reminder of the risks involved in their business and the challenges of global economic conditions. Alright, that is our breakdown of Helen of Troy's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.